Hey everyone, and thanks to Draper Goren Holm for hosting the LA Blockchain Summit and to the audience for taking the time. Super excited to jump into the topic of blockchain investments during COVID. We have a lot of really great speakers on this panel. So why don't we go around with quick introductions and at a high level, dive into, what have been major investment themes that you've been focused on or looking at over the last 6 months or so? Bryan, why don't you kick it off for us?
Yeah, thanks, Aya. So my name is Bryan Myint. I'm the co-founder at Republic Crypto, and I also head up the West Coast side of our advisory business. Republic, for those of you that don't know, is an investment platform. We specialize in compliant fundraising in the United States and around the world, specifically for retail and also for private fundraisers. And as mentioned, we also have an advisory arm that helps take early stage blockchain projects from kind of like an idea stage all the way through, the white paper, the pitch deck, pitching investors, exchange listing, and the whole shebang. And yeah, it's really great to be here and excited to meet everybody. For what I've been seeing recently in terms of investment trends, lately the past year, it's been really something that is more turned towards blockchain native investments. So things like the decentralized finance applications and non-fungible tokens, these are both things that are uniquely enabled by blockchain. And I think they've been really trending in the past few months, as opposed to kind of like the layer one protocols that we've been seeing the past few years.
Cool. Sam, you want to take us next?
Sure. Yeah, at Bloccelerate, we're focusing on enterprise adoption of blockchain. We think the last decade was much about money as a service use cases, remittances, and decentralized application tokens. Surely they are poised for growth in and of themselves, but we see more of the 0 to 1 innovation will come in enterprise adoption, where existing workflows are updated, upgraded with the consensus over the wire that blockchain presents. And that's mainly the theme that we've been investing around in companies like Block Apps and Symbiont.
Great, thank you. Christian.
Yeah, Sustany Capital, we focus exclusively on the blockchain space, and within the blockchain space, mostly on value transfer systems. So the effect kind of that we see from COVID is that certain developments have been accelerated. As an investor, the most important thing is timing, right? You don't want to, the typical saying is you don't want to invest into the first social media startup, you want to invest into the last, and that's kind of the same within that theme. So this particular scenario has led up to some developments here, specifically in California. They have a large budget shortfall, so they accelerated the innovative suggestions that they are open to, like California Blockchain Working Group has just submitted their proposals. We're involved to some extent in that. So it's really, from our perspective, it's a change in timeline that this introduced, because certain things are just way more needed. And the mother of all invention is just pain in essence, right? And we're experiencing a lot of pain in the United States and around the world. And a lot of these solutions that we have been looking at and been waiting for to be adopted by governments and so forth, they are now no longer like optional, they are a requirement. I mean, California is facing like a $46 billion budget shortfall, and just doing the release of these CARE Act payments, we as taxpayers had to pay $500 million to banks in fees for this money to be actually distributed to citizens, and that's an outrage. Right? That is just unconscionable. It's like forcing everybody to still use the U.S. Post Office when we all have email, right? So the typical thing that I've been saying for 5 years in explaining this technology is, if we all had to pay stamp fees, but we all had to put a stamp on an email, this would exceed the gross domestic product within a couple of days, right, within the United States. But for some strange reason, we allow this with our value transfer systems, on money being the simplest value, right? And so, long story short, it's an accelerated timeline that we are experiencing on our end.
Yeah, absolutely. To that point, Cecilia, I would love to hear your introduction and investment themes that you've been focusing on as well.
Sure. So I'm Cecilia. I'm an investment advisor at Unicef Ventures, specifically Unicef's venture fund. And I know there's a lot of words there that are not so intuitive to people, at least not together. So Unicef Ventures is a division within Unicef that focuses on how frontier technologies can benefit children around the world, but especially in low-income countries. And within this division, I manage the strategies behind the sourcing of investments, behind the selection process, and the portfolios of investments. How do we support them once we decide to invest in them to help them grow and scale? So UNICEF's venture fund specifically, it's a relatively small fund, $30 million. It was the first pooled funding vehicle, so venture kind of vehicle within the United Nations. So that's why it was quite breakthrough 4 years ago when we started it. And again, it focuses on identifying startups that are working with frontier technologies. And blockchain is definitely one of the key areas that we focus on. So quite regularly, we explore different solutions, essentially mixing blockchain applications being developed by local teams from developing and emerging countries. And basically those solutions have to have the potential to improve the lives of children in the world. So I guess I'll leave it there, but I can like expand a bit more later.
Definitely. Yeah, no, definitely. Super excited to dive into it. First, Mansoor, would love to introduce you as well.
Absolutely. Thank you, Aya. So my name is Mansoor. I'm a partner at Blockchain Founders Fund. We invest typically in pre-seed to pre-A companies. And we also run a venture program where we work with a lot of the companies to help them grow and find traction, validation, and go to market. Some of the themes that we are focusing on right now, we find a lot of interest. DeFi, of course, it's a hot sector. But all of the other applications that we've kind of always been talking about the last few years in crypto that really haven't made it mainstream yet outside of the crypto community, things like trading applications, but lending, remittances, insurance. I still think there's a major need for financial infrastructure that would allow institutions to come on board into the sector. But then some other ones include like NFTs and gamings. I think there's a big application there when we talk about collectibles. Data and analytics, I think that's another big sector, especially given that we have a more B2B/enterprise focus as well. And the data and analytics are something that all larger business and corporations essentially want to leverage in some way. And it pairs with other technologies as well, right? When we start talking about AI or machine learning, I think that data and analytics will play a critical role.
Absolutely. So I know, first off, very diverse panel. I think in general, we're covering a lot of different portions of the blockchain ecosystem. And so I'd like to break it out first, thinking about liquid versus illiquid investments. And so especially, a few of you mentioned the DeFi space, the NFTs, non-fungible tokens, as well as more on the illiquid venture investments. So how do you think about liquid versus illiquid, especially given the last few months and maybe the next 6 months, and what does that look like relative to, again, your investment thesis, and how do you think that's going to play out over the course of, let's say, the next year?
Take start with that.
Yeah, absolutely.
Sounds good. Yeah, great. So in a nutshell, we are taking a variables kind of approach in finding reasons to invest. And mainly, it says my internet connection is unstable. Can everybody hear me?
You're good.
Okay, great. So what's same in illiquid and liquid investments is we are still looking at team, timing, value proposition, valuations being some multiples of revenues and competitive differentiation. But what's different is, of course, in the context of a token, if it's a liquid investment, we look at market cap and token economics, and then making sure that the utilization of the platform is coupled with the value of the token. And good examples of that are projects like Maker, where the interest ends up buying and burning the token that effectively can recapitulate the utilization and the value obtained by the users to the token holder.
Mm-hmm. Christian, I saw you shake your head. I think you're on mute.
Yeah, so we are traditional technology investors, right? So we have been in technology investing for 2 decades at this point in time. So we take a very long-term view. So 5-10 years is our horizon. We kind of work backwards from that horizon. Where can this particular company, this particular technology be in this particular time frame, right? And so I typically take the contrarian view when it comes to token. I've been saying for a long time that the number of cryptocurrencies we probably need is somewhere between 0 and 1. There's a lot of people that don't understand how value transfer is working today and how it's going to work in the future. But the larger point here being is, so what's liquid today might not be liquid tomorrow, might not be even there tomorrow. We have already obviously seen that. We have like 7,200 coins and tokens right now, and 99.9% of those are going to zero. And that always happens as a general observation when you conflate the functions, right? And a lot of times, if a token ends up being traded on a even custodial or non-custodial exchange, or decentralized exchange, like it's sometimes referred to, it defeats its inherent intent of whatever it's trying to do, as if it's governments on that network or what else, right? So the typical example being Ether in Ethereum, its main purpose is that of DDoS protection, but obviously now with it being mainly used for speculation, it doesn't work well. In a way it works better, but at the same point in time, it really doesn't fulfill its original function at all. So the larger point here being, though, is that oftentimes there's a conflation between what is a blockchain, which is really an application. It's not a protocol. The blockchain makes use of a lot of protocols, and that's the part that we still need to realize, because a lot of the things that tokens are doing today will eventually kind of go under the, let's call it the hood, because obviously the population at large doesn't care about tokens, will never care about tokens. Like, this is the largest friction you could possibly introduce if you introduce a new unit of account. That's the equivalent of trying to teach everybody in the world Esperanto so that they can talk to you, right? That has never worked. And that's kind of has been the biggest rub with this particular space, which is super unfortunate, because there's a lot of great talent in there. But obviously the idea that I can create my own money is very, very tempting, right? So as far as that being liquid right now, it's not actually interesting to me. To me, that is a big concern. If that's one of your focus points of something being liquid right now, I'm more interested in you building technology that's going to be viable in 5 years.
Well, so, comparing to that, Brian, you focus primarily with the retail population. So how do you comparatively view that?
Yeah, I think all of Christian's points are super valid. I think coming from like a technological standpoint, I do agree. There needs to be some consolidation. There needs to be some real world applications. But going back to kind of like the liquid versus illiquid, I would say those lines are being blurred a lot lately because of the rise of, these exchanges, these decentralized exchanges, which are actually increasing in volume and even actually surpassing the volume of centralized exchanges. So the type of cryptocurrencies that exist that are being actually liquid, that can be used in exchange for goods and services, is increasing at a very fast rate. Whether or not those cryptocurrencies are actually going to retain that value in the long term is another question. But if you're just talking about whether or not these tokens and these cryptocurrencies are liquid today, and if they're available to invest in the same way that you can invest in stocks and get USD back, I would say there's actually quite a bit of liquidity in the cryptocurrency space. And for retail investors such as myself and such as the retail investors around the world, not only in the United States, but in Asia and Latin America and all these other countries that maybe don't have access to as advanced of a banking system as we do in the US, the liquidity of cryptocurrencies is actually super helpful and is allowing people to exchange crypto for goods and services, maybe not in exactly for fiat, but because you're able to exchange this crypto for goods and services, that is a form of liquidity in itself. So I would say, you know, to kind of go back to what Christian was saying, we might not see all these currencies exist in 5 to 10 years, and we might not actually see all the technology that we see today exist in 5 to 10 years, but in the short term, there are people that are using these for goods and services and exchange of value and for true liquidity.
Yeah, I'd like to jump in with a few thoughts there on this. So I think there are valid points from Sam, Christian, Brian, each of you. I'm kind of somewhere in the middle. So one of my issues with having so many tokens is I just don't see that all of these will be used other than for some store of value, and only a few can kind of play that role. As an example, if I were to use USD and transfer into any cryptocurrency, I'm incurring some sort of fees. You know, some of them may be fixed, and then like FX fees. And then if I'm paying somebody for some goods and services, they either need to liquidate that like before the transaction's completed or on the transaction being completed, because their accounting processes are probably in USD, and then their suppliers are probably paid in USD. And so if everyone in, you know, the entire value chain isn't using the same currency, you're going to have multiple fees stacked throughout this process. And so I think in that way, cryptocurrencies are actually right now making transactions more expensive. And I think that's, you know, very counter to what like the original mission is. And so that's where I think governments, you know, launching their own central bank currencies as an example, I think will kind of eliminate a lot of these tokens that are existent that have just low kind of traction or low volumes, things like that. And we'll probably see like a consolidation and only a few kind of stick around. But I do think there is need for like other types of cryptocurrencies. When you think about like, for example, loyalty points, these are like a closed loop economy. And so there's projects like Fuse, which is a DeFi product that enables, say, like academic institutions or businesses to kind of have like their own currencies, and they can be used, for example, in refugee camps and things like that, where the transactions need to take place in that ecosystem, but then they don't have the, say, like the typical financial infrastructure, or they're trying to avoid kind of using that. So I think there's kind of this balance kind of between both worlds that we talk about.
And Cecilia, curious to hear your take coming from more of the non-profit side. Are you looking at hybrid liquid and illiquid models? Is there one theme that you focus on specifically?
Sure. Yeah, it's interesting how like so we do not refer it as like liquid or liquid, mainly just because our investments are equity free. So we do not expect a return on the investments. But hearing what everyone was talking about, one big thing about our fund is that we purely invest in open source solutions, whether it's blockchain or data science, AI, drones. We focus on open source technology. And from the side of the United Nations, there's multiple reasons why we believe in the model, but one key part of it is that if we see a solution that is being effective and is producing a substantial positive social impact in Malawi, we want that solution to be as quickly and as good as it can be scaled as possible in other locations, let's say in Brazil. And this is just a much easier way if you do it with open source technologies, just because the code on its own, it's just more easily understandable by other communities. So in that sense, we talk about the open source technologies that the companies generate as our equity. And in a way, like the technology that the startups generate couldn't be more liquid, in the sense that more solutions can just overlap, take some of the components and combine it with their own to grow and scale, and just generate a more positive impact. So that's I guess like our take on the liquid model. But I think one other important thing to highlight is that a couple of months ago we decided to launch the crypto fund, which is the first crypto-denominated fund within the UN, again, that accepts donations and makes disbursements in cryptocurrencies. In that sense, it's also the same model where we invest in open source and we don't take any equity either. And we consider the open source technology to be our equity and the return that the companies make to the world in a way. But it was just an interesting time where we did this at the moment where COVID exploded and we needed a fast, quick way of acting. We needed to transfer funds to solutions that were acting towards COVID, whether it was to generate more connectivity in non-connected areas in a time where connectivity meant just being part of the world that was, going through so many social limitations and distancing, whether it was for education to improve remote education, whether it was to use like a blockchain platform to track the delivery of food to low-income areas. So in that sense, just our take on COVID was we needed a fast financing way to get the money into the startups working to tackle these mitigation strategies towards COVID. And we found there was just no other faster way to do this than using this crypto-denominated fund and in cryptocurrencies.
Sure. So I guess specific to that last point and what was mentioned previously, did you use one cryptocurrency or was it across multi-cryptocurrencies dependent on what the company accepted?
Sorry, I think I got cut off.
Oh yeah, no worries. So specific to your last point and just the previous points, were you using just one specific cryptocurrency to fund and transfer money, or were there multiple currencies and was that dependent on the company and what they accepted?
Yeah, so at the moment, the crypto fund has been built upon accepting and dispersing Bitcoin and Ethereum, not because we're endorsing those two cryptocurrencies, but more because they're the most widely used. And it was just, it just made the most sense to use those because they would be the ones that more startups in the countries where we operate would be able to accept, utilize, and quickly act with them. So at the moment it's those two, but that could change as we continue working on that.
Christian, now you have to increase it from 0 to 1 to 0 to 2.
Well, actually, to speak to that point, you seemed to be disagreeing with what I said, Christian, though I didn't hear much of a dissidence in what you were saying. One point.
The larger point is that the unit of account, right, is just that. It's just your language of value. And trying to change this by introducing Ether or any other stablecoin for that matter is just quixotic, right? You won't be teaching people a new language of value. And it's not needed, by the way, because the default medium of exchange has been bytes for decades. It's just that these bytes are right now trapped into databases. So as a technologist, your task is to liberate those bytes from the databases that they're in right now. So the first step here is, and we have been talking mostly in terms of M1 money, right? The first step here is to liberate M1 from the current stronghold that financial service providers have and make them available across other networks specifically for, and that's what you see in DeFi right now, albeit it's entirely insulated from the real world, obviously, if and until we have CBDCs. And that's just to say, that is then the language that everybody understands, right? The language of the world.
I think your metaphor of language is more applicable than the data on zeros and ones. And if you think of it in sort of a natural sciences view, well, many languages did emerge, many species did emerge. So even though theoretically one species could have been the only
now we're
life
talking
form,
about technology.
what happened was,
yeah.
Many languages did emerge, and same with computer languages as well.
Well, so you got to cross the bridge between technology and language here. So we're all using right now the same voice over IP protocol, right? That's the key here to understand. So you're liberating the bytes from databases that are value transfer, and they will all be using more or less the same protocol. We only need one for that, right? And that protocol is probably denominated as a unit of account in US dollar, which is 60% of the world value transfer today. And it's probably denominated in whatever has the least friction, right? And that's
well,
it.
I think real quick though, to that point, you know, Cecilia didn't mention that there were any stable coins that they were using, none that are at least backed by US dollar. And so I think it also depends on timeline. So, you know, what might work, and this goes back to your first point, Christian,
Right.
and even Brian, right? What were the investment timeline for the next 6 months may not be the investment timeline for the next 10 years. Because even on the topic of CBDCs, in the US, we're nowhere close to, you know, it being functional just yet. And so, you know, and this kind of leads into the COVID topic, but, you know, what would we do today if we were to, you know, give out another stimulus check? How would we do it differently than the first time?
Well, I have a long proposal in front of me. Yeah. So now we actually made
You have 3 minutes.
Okay. No, so we actually made very, very detailed recommendation how this is going to be accomplished, right? And a lot of this has to do with the fact that money is actually not being created today in most cases by the Federal Reserve System. It's in most cases created by commercial banks. There's a lot of confusion going on who gets to create money and who gets to move money that we need to unravel here, and what is money really, right? Because all the discussions that are being had, they're typically entirely useless, because the term money by itself is really useless. You have to really point out what is the database entry you're referring to, because in some sense, I want money to be inflationary, right? If I own it. In another sense, if I hold it, then I don't want it to be inflationary. So it's very nuanced. It's not a one size fits all discussion. It's very much dependent on what database entry am I looking at, and that's 97% of all money today. It's just a database entry, right? But we don't really deal in physical cash on that matter anymore. Albeit there's 10% of even the US population that are entirely dependent on physical cash right now. They can't participate in the digital economy. They can't get bank accounts. They don't have identity. And so that is obviously more prominent around the world, even more so than it's in the United States. And so those are the real problems. We don't really have the real problems here in the United States. The real problems are consistent in other countries where they have hyperinflation, where they don't have identification documents and so forth. They cannot participate in the economy that we structure today, which is entirely dependent on the movement of bytes.
And specific to identity, does anyone else, I know this was mentioned in our panel prep conversation, but as we look into COVID's impact, what specific to identity do we think is going to change, at least in the investment landscape?
I don't want to.
In the last minute we have.
Take it over.
I think
organizing a separate event on the entire topic of identity in another context with an expert organization that's open source, that provides open source standards specifically for the travel industry, where we are addressing the topic of identity. But that is what I said in my introduction initially. It's like, this is the most important topic to get right? As in, if and when we have biometric data on blockchain-based solutions today, right? And Finland right now is piloting biometric blockchain or biometric solutions today. So if we end up storing this information in databases, we will all live in an Orwellian world. Right?
Wait, sorry, and real quick, Mansoor and Sam, I know you wanted in the last 30 seconds that we have.
Yeah, well, I think we'll just recognize that most of the features of our identity are also assets that are worth tracking and selectively sharing with other parties. So I'll leave it at that.
I was going to add one other thing to this identity conversation that I feel often gets left out, as a lot of the blockchain projects take a very idealistic approach, but at the same time, like, you need governments and you need other institutions to recognize and essentially contribute to this ecosystem. So I think that's probably one of the biggest hurdles.
I just want to close up real quick with that, saying, like, I think blockchain projects are, because they're ideal, they're trying out all these new things, and governments will eventually catch wind of the potential that is unlocked through blockchain-enabled identity management solutions. It's just going to take some time. It just kind of all comes down to us being so early in this.
Absolutely, absolutely.
Mm-hmm. Great. Thank you all so much. Clearly, we can spend another couple hours discussing this topic, but this is why the investment space is so interesting. Again, thank you to Draper Goren Holm for having us and the audience. We appreciate the time.